Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. With plug-in hybrids or PHEVs on the EV tax credit bill, then these are going to be new cars with some significant price drops. Accompanied by the rhetoric from the government that they're trying to transition to cleaner transportation, demand for plug-in hybrids and battery electric vehicles will surge. We are talking up to $12,500 discount here. Even when the Cash for Clunkers program started with a maximum of $4,500 off a new car, the program exhausted the budget in the first month. So Congress then tripled the budget from $1 billion to $3 billion. But this new program could cost more like $100 billion, over 30 times as much. This will have some serious economic consequences. Consumers will take advantage of these credits. Demand for eligible vehicles will go through the roof. But what will people do with their old cars? Well, they'll sell them or trade them in. What does that do? Obviously add significant supply to the used car market. What happens when there's too much supply? Prices have to come down to meet the market clearing price. But now you have to compete with the new cars with up to $12,500 discount. Okay, so in the used market now, obviously any used PHEV is now going to have lost similar value instantly. Why would you want to buy a 2-year-old PHEV for $30,000 when you can get a new one for about $25,000? So any current car owners holding a PHEV instantly lose money. Same for any dealerships. Their PHEV stock just hit a huge hit. You see, this is the thing. Governments may like to make you think they can simply create money and magic it up somehow, but the money always comes from somewhere, namely the taxpayer, in one form or another. The other problem is that when they spend money, they mess with the free market, the natural flow of the economy. Governments create laws and regulations that have all kinds of perverse and unintended consequences. The government then creates all kinds of new laws and regulations to fix these consequences. Rinse, repeat. But this could be significantly worse for ICE cars. Now the narrative from the government is that you need a clean car, electric or plug-in hybrid, so demand for ICE will plummet, and because of this incentive, supply of used cars will increase at the same time, due to so many people selling their ICE car for a new subsidised EV. For example, as far as I can tell, the Ford Escape plug-in hybrid is made in the US, and therefore is eligible for the full tax credit of $12,500. This car starts at $33,000. In other words, we're talking about $20,500 after the tax credit to buy this car. Of course, a lot of consumers will finance it anyway, and the savings on gasoline would outweigh the interest on the loan. This becomes a ridiculously cheap car. A used 2022 Escape Hybrid with over 10,000 miles on the clock still costs $30,000. You could save $10,000 and get a brand new one. And that's exactly what will happen. A used one might have to compete at more like a $15,000 price tag to reach the market clearing price. That is half the value of the used car wiped off. That's a lot of money. If the tax credit was solely for actual BEVs, then it wouldn't have the same negative consequences. For example, a Model 3 Standard might be around $30,000 after incentives, but that's not going to wipe $10,000 off every used Tesla, as there isn't enough supply. Okay, perhaps if you're holding a Chevrolet Bolt, it might lose a bit more, as it doesn't have quite the same demand. And if you bought a Ford Mustang Mach-E, well, you already got $7,500 credit anyway, and that's all the Mach-E is eligible for. Anyway, as for the Ford Escape, it is at least a hybrid or even plug-in hybrid. It's going to be even worse for ICE cars, as the market is being flooded with extra ICE cars from people selling them and trading them in to buy a brand new EV. It will not be a rational decision to buy an ICE car, unless you simply love a particular ICE car, and now it's dropped in price so much that you can afford it. Either way, any demand will be as a result of price drops, and there won't be the demand to support the previous value of these vehicles. But free money! The government are giving away free money! Everyone wants their share, especially when it's around $10,000. Consumers know they're paying for this one way or another, so they better at least get their fair share. $12,500 is over 3 times what the maximum payout was on Cash for Clunkers. They'll be queuing up around the block, except the thing is, they might have just lost around $10,000 on their ICE car too. When they go trade in their old car, which previously had a trade-in value of perhaps $20,000, well now they might only get $10,000 for it. Car dealers know their industry. They know when consumers change their buying habits. Their job is to find the supply of the right vehicles that meet demand, or else they go out of business. It's dangerous buying such high-value stock that depreciates so rapidly. I mean, what can a used car dealer do? They have this ICE stock that has now dropped half its value. They have a queue of people wanting to sell their used ICE cars to them too. Do you think they want to buy them? I'm not quite sure what the sensible business decision here is, or even how to stay in business. I'm not sure I see a future for used ICE car dealers. Consumers are going to start seeing their ICE vehicles as a time bomb, until no one at all is going to want them, and they're going to lose a ton of value. It will be a big game of musical chairs, everyone scrambling to sell their car before the music stops. But even if PHEVs are on the bill, well then there might not be enough supply, at least not initially. People can order their EV and go into a waiting list, but they still need something to drive in the meantime. As long as they can get another year or two out of their existing car, then maybe they'll hold on to their ICE car, and the value has probably already been wiped off it. So it might make sense to hold on to it until then, as they already paid for it. Okay, let's run through this a bit deeper, actually using a rational economic person. You can now get a new car at an insane price. You don't want to miss out on this deal. In reality, you never know how long it will last. They'll be climbing over one another to make sure they get their discount. Not to mention they just paid indirectly for this by losing thousands of dollars on their ICE car at the same time. They want what's theirs. So you order your Tesla online, or you go to your local legacy dealer and buy or order a PHEV, or maybe a BEV, but you weren't the first person to get this idea. Some people saw this coming and already ordered. The waiting list is now 1 year. However, as the waiting list, even for PHEVs, might be so high, then perhaps some of that demand will pass over to the used PHEV market. As we expected PHEV prices to crash, to adjust for the discounted price of a new PHEV, then perhaps some people won't be able to resist the price of a used PHEV too, as it's now also significantly discounted. But there is no other reason to buy PHEVs, as the consumer's motivation isn't that they're cleaner, but they are cheaper. Thus demand has not increased from people becoming more environmental, but solely through lower pricing. Okay, so 1 year passes and you can finally go in to purchase your PHEV. Of course, the car dealer knows what the demand was like, and they've probably increased the suggested retail price, as they know they can get away with it. Everyone takes their cut. Also, they might justify this profiteering over the fact they lost so much capital on their ICE inventory. But still, sales have never been better for them with all these PHEV orders. They can sell every PHEV they can get, and with twice or even more their usual markup. And these cars still need to be serviced for oil changes, so the dealers will order as many as they can. It's a new car dealer's dream. Well, as long as the manufacturer they deal with actually makes plugins too. Anyway, the rational economic consumer finally get their PHEV and now has to dispose of their ICE car. But who wants to buy it? Yeah, it's not going to be easy to sell. And what about some consumers who have an ICE car on finance that they paid over $40,000 for, and now it's worth, well, possibly only $15,000 after just 2 years? Yet they still owe $30,000 on it. They don't want to owe $30,000 on a $15,000 asset. Depending on their financial position, among other various situations like credit score, they may just renege on it, and it will be repossessed, which means the legacy auto companies have to wear that cost. Less ethical consumers might write their cars off for the insurance money, thus inadvertently affecting insurance companies and in turn premiums to consumers, except for Tesla insurance, of course. Remember, this tax credit is not an over-the-night incentive. It's going to last years, even possibly into the second half of the decade, which means eventually there should be enough EVs to go around for everyone who can afford them. In fact, some people may go through 2 or 3 EVs over this period. Buy one now, own it for 3 years, sell it, then buy another one, as they're so cheap. So the used PHEV market will build up. There won't be natural demand for it though, unless consumers are actually convinced they are better for the environment, and thinking that they are buying clean energy cars, which perhaps the legacy autos will likely cajole consumers with their manipulative advertising. Okay, so legacy can sell all the PHEVs they can make, but what about all their ICE? It's irrational to buy something that loses $10,000 to $20,000 the moment you drive it off the dealership. Yeah, so legacy just lost their ICE business. Good luck surviving without that. But like I said, this will go on for years, and what is coming in a few years? The end of autos as we know it. The $25,000 compact Tesla. Or would that be the $15,000 Tesla? And unlike legacy autos, the Tesla showrooms aren't going to raise the price on you. Also, unlike PHEV, it's fully electric. You never need any fuel, along with all the other benefits of an actual BEV, like only having to charge once a week, compared to once or twice a day. Yeah, hardly convenient. Oh, and all the added benefits from a Tesla too, along with FSD. Tesla just have to get their LFP production up, but these Model 2s may be able to run on only a battery size of around 35 kilowatt hours, which is probably not far off, only twice what some of the hybrids have. Okay, so if Tesla can produce 5 million Model 2s a year, then we're talking about just over 150 gigawatt hours of battery requirement. Do the numbers. That's not a lot of batteries required. Tesla will have that much supply next year, and the majority of those batteries are 2170s, which means they have nickel and cobalt in the cathode, scarce minerals in very high demand. The Model 2 batteries will have iron phosphate cathodes, which are more abundant and cheaper. The dry battery electrode manufacturing process will have been perfected by this stage, along with all the other revolutionary new battery manufacturing techniques Tesla has achieved. Of course, you'd hope supply chain issues are sorted by this stage too, meaning that there's very little to constrain the production line of the Model 2. This is the car that ends the legacy industry. So surely, Tesla would build a factory for the Model 2 in the US, possibly as an extension in Texas. It wouldn't even cannibalize their other products, as they will also have a tax incentive, and demand for those will be crazy enough anyway. In fact, the purpose of the Model 2 really would be just to end the rest of the PHEV market, and it should have negligible effect on the rest of Tesla's demand for their other products. So what if Tesla could be at 10 million total units a year just in the US, perhaps by 2025? Would that mean they have 50% market share? Well, maybe not. Legacy autos would have most likely been gone by now, with the exception of possibly Toyota. Some of the other EV companies might have started finally making some alternatives too. I mean, the alternatives won't be close to Tesla, from a value proposition perspective of a rational consumer, but some people want something different. I conducted some of my own market research and had about 100 Mach-E owners tell me why they bought it. Aside from a couple of die-hard Mustang fans, the two reasons were that everyone had a Tesla, so they wanted something different, and the other reason was they simply liked the look of the Mustang better than the Tesla. On the other hand, once Teslas drive themselves, then you're probably too busy looking at the screen to watch Netflix, rather than the look of the actual car itself. Okay, that was a lot to go through there, and it doesn't cover it all, but as far as I can tell, ICE cars are going to suffer enormous amounts of depreciation, and the consequences will proliferate to consumers and businesses. Now, if it was solely a BEV tax credit, then that might be different. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.